It's Wednesday, February 4th, 2026 in the garage, and tonight I'm going to show you something that will change how you see every single market on the planet. Not because I have a crystal ball, because I have a lift, and when you put today's market on the lift and look underneath, you'll see two completely different engines running at the same time. One is breaking down, one is quietly getting rebuilt, and almost nobody's watching both. Let me give you the headlines first so you can see what the surface looks like. Treasury is draining $128 billion from the banking system through April. The yield curve just uninverted to plus 0.71%. And if you don't know why that's terrifying, stay right here because I'm about to explain it. The VIX says calm at 16.3, credit spreads say liar. Dealers are pinning the S&P at 7,000 using options mechanics while hedging for a crash in tech and crypto. Gold is up 6% while Bitcoin is down 41% from its peak. ETF outflows hit 243 million on Monday. But a single whale just pulled 148,000 Ethereum, $427 million into cold storage in 48 hours. Bitcoin exchange reserves hit multi-year lows while price sits in extreme fear territory, and the entire AI narrative just shifted from chips to power while nobody was paying attention. Now, that sounds like chaos, but it's not chaos, it's mechanics, and we are the only ones who explain the mechanics. So smash the like, hit the follow, subscribe right now. Because if you're getting your market education from people who read headlines like bumper stickers, you're going to get left on the side of the road with the hood up and no tools. Let's start with the one thing that connects everything tonight. The market is being drained from the top and tightened from the bottom at the same time. That's it. That's the whole engine. Everything else is exhaust. Let me put this in garage language so it sticks. Imagine two mechanics working on the same car. One mechanic is underneath draining the oil pan. The other mechanic is up top quietly rebuilding the engine block. If you're standing 10 feet away, all you see is a car that doesn't run. You think it's dead, but if you're in the garage, you see one guy removing what's weak and another guy installing what's strong. That's what's happening in crypto right now. The leverage market is being drained, the supply market is being rebuilt, and the crowd can only see the car that doesn't start. Let's go to the drain first. The liquidity drain. The US Treasury is running what I call a vacuum operation. The Treasury general account on the government's checking account is heading to $1 trillion by April. That's a $128 billion withdrawal from the private banking system. Think about that like this. You've got a fuel system that feeds every engine in the market, stocks, bonds, crypto, real estate, and the government just hooked a siphon to the main line. They're pulling fuel out of the system to fund the deficit. And every high-performance engine that runs on cheap available fuel, it starts to sputter. Now here's where it gets mechanical, the yield curve. Everyone heard about the inverted yield curve for the last 2 years. The 10-year minus 2-year spread just hit plus 0.71%. This is the part of the cycle where the engine doesn't just overheat, it seizes. And we are in that zone right now. Not because I'm being dramatic, because the math says so. Now stack this on top, 125 billion in Treasury auctions hitting next week. 3-year notes on February 10th, 10-year notes on February 11th, 30-year bonds on February 12th. This is the government walking into the market and saying, buy our debt right now at these yields. If private demand isn't strong enough, primary dealers, the big banks have to warehouse the risk. That eats their balance sheets, which means less liquidity for everything else, stocks, crypto, all of it. The 10-year auction on February 11th is the single most important event in global markets this week. If the sovereign can't find buyers without spiking yields, the mechanical de-risking accelerates. That's not opinion, that's plumbing. Now here's the part that separates garage thinkers from tourists. The VIX is lying. The VIX says 16, calm, relaxed, nothing to see, but credit spreads are widening. This is like a car with a dashboard that says all systems normal, while the transmission is grinding. The dashboard lies, the sound doesn't, and credit is the sound. When equity calm and credit stress disagree, follow credit. Credit wins. It always does. Now the NASDAQ is not the S&P. The S&P is pinned. The NASDAQ is fragile. Lower highs sitting on a precarious trend line. A break below 24,000 triggers massive CTA sell orders. The S&P has shock absorbers. The NASDAQ is running on bald tires, one pothole and it's sideways. Now let's go underneath the car. Crypto, because this is where the second mechanic is working, the one nobody's watching. Bitcoin is down 41% from its peak. Extreme fear. Everyone is screaming, it's over. Now look at what's actually happening under the hood. Exchange reserves just hit multi-year lows. 2.3 to 2.4 million Bitcoin across major exchanges. That's a 21% decline in available supply. ETF outflows are retail wealth management clients rebalancing. Fidelity led the day with 312 million in redemptions. But BlackRock added 228 million the same day. Retail is running out the front door while institutional money walks in through the loading dock. Here's the key contradiction that matters. Supply shock signals are rising while price stays weak. It means we're in an absorption phase. Weak hands dumping, strong hands loading. That's why we track flows, not feelings. And here's the big one. Strategy, formerly MicroStrategy, has an average cost basis around 76,000. When the primary collateral for a leveraged position falls below purchase price, it creates what we call a collateral vacuum. That's a contagion story. One OG wallet just pulled 148,000 ETH off Binance into cold storage, $427 million in 48 hours. That's someone who's seen this movie before and knows how it ends. Solana. Order book depth deteriorated 14.8%. Book is thin on both sides. Crowded shorts in a thin order book with whale accumulation underneath. That's a spring-loaded setup. It's going to move hard, one direction. Right now, that correlation is broken. Gold is acting as a collateral-sensitive sovereign hedge. Bitcoin is acting as a leveraged liquidity proxy. It trades like a high-beta NASDAQ. When liquidity drains, Bitcoin gets sold first because it's the fastest ATM in the financial system. Just physics. The next AI bottleneck isn't chips. It's the grid. Everyone's fighting over GPUs. Meanwhile, the electrical grid is sitting there like an engine block that hasn't been upgraded since your grandpa was alive. You can't run the future on yesterday's wiring. The wildcard, orbital compute. SpaceX just filed for orbital data centers. Concept, bypass Earth's power constraints. Solar panels in orbit are 8 times more efficient. No atmosphere, no night cycles. If Earth can't deliver, orbit is the only escape valve. This is where the smart money is quietly building. Real-world asset TVL just hit $17 billion. For the first time, RWA TVL surpassed DEX TVL. This is the quiet revolution. While everyone watches candles, the rails are being laid. Now, token unlocks, 3.1 to 3.9 billion in tokens hitting circulation this month. SUI, Sand, Aptos, Arbitrum, that's supply hitting a market already in capitulation. The calendar matters more than the chart right now. Capital is in defensive mode. Within crypto, it's the same story. Bitcoin dominance near 60%. The market is saying, if I have to be in crypto, I'm going to the strongest engine in the garage. The VIX is your dashboard, and then right now the dashboard is lying. The tread is thin, the fluid is low, and the engine temp is climbing. So we don't marry a narrative. We watch the pipes, we read the gauges. 2 markets are running at the same time. One is being dismantled, leverage, froth, fantasy. The other is being assembled, supply tightening, infrastructure, regulation. When those 2 markets converge, the move won't be emotional, it will be mechanical. So if you're still here, you're Garage Gang. Smash the like, hit the follow, subscribe, because we don't do headlines, we do engines. Seatbelts on, hands steady, eyes on the gauges, engines hot, safety off, let it rip.